welcome back to another video with Crazy Commerce. Today we'll be learning an Igcse topic of accounting, which is control accounts. Before we start the video, please subscribe to my channel and hit the like button, as well as keep the bell icon on so that you get notified for more of my upcoming videos. So in this topic, we will understand the purpose of the purchase ledger and sales ledger control account. We also identify the books of primary entry for the control account entries, and we'll also prepare the purchase ledger and sales ledger control accounts. So there are two types of control ledger accounts, which first one is purchase ledger control account, second is sales ledger control account, and we'll have a look at each of these. But before that, we'll just see the general meaning of a control account. So control accounts are also known as total accounts, and they are essentially summary accounts in general ledger. So they are the summary of all the sub ledgers, and they contain of totals instead of the individual debtors or creditors. Now we all make debtors or creditors ledgers, right? Now after we make the debtors or creditors ledger, after that we'll be making this control account. So the totals of those ledgers will be taken into the control account. So that is why it is a summary account. It comes under general ledger and it is done by a different person. Now we'll have a look at the sources of info on the sales ledger control account. So the credit sales goes in the sales journal, and the return check or unpaid check is from the cash book. Interest charged to debtor general journal. Cash or check from debtor is cash book. Discount allowed cash book. Sales return is sales return journal. Bad debts written off is general ledger, and set off or contra entry is general journal. So the sources of information in a purchase ledger control account is credit purchases in a purchase journal, interest charged by creditor general journal, cash or check paid to creditor cash book, discount received cash book, purchase return journal, and set off a contra entry under general journal. So this is the end of our part 1 video. So this is just about the theory of control accounts. In our part 2 video, we'll be coming up with the working out of a problem on purchase and sales ledger control account. And thank you for watching Crazy Commerce. Please subscribe to my channel and like the video, as well as turn on the bell icon so that you can get notified on more of my upcoming videos. Thank you very much. The reasons for preparing the control accounts is to check the accuracy and to make a summary of all the ledgers, and to also check for errors. Now there are many reasons for making a control account apart from this. So why are they called total accounts? They're called total accounts because they record the total accounts of sales and purchase ledger control accounts. They don't record the individual debtor and creditor ledgers. They record the totals of those ledgers. So this is the format of a sales ledger control account. And a sales ledger control account, first we have balance brought down on both sides, but they generally have a credit balance, and then we record on the debit side. So this is the debit side, and here we record the credit sales. Remember, we don't record the cash sales, we only record the credit sales. And then we record the return check or unpaid check. We also record the interest charged to debtor, cash refunds to customer. Then we do the balance carry down. And remember, including balance carry down and brought down, there are 1, 2, 3, 4, 5, 6 items before the total. So this is the total. So in the debit side, there are 6 items in the sales ledger control account. Now on the credit side, there is cash or check from debtor after balance brought down, then discount allowed, sales returns, bad debts written off, set off or contra entry. So contra entry is also known as set off entry. and then balance carry down. Then again we have the total. Now remember that in the debit side of a sales ledger control account, everything is to, but in the credit side it is from. Then after that we have the balance brought down here. After we find the totals and then we balance everything, we get the balance brought down here. Also remember, for remembering the purchase ledger control account, it's best if you first learn the sales ledger control account thoroughly, because the purchase ledger control account is just the opposite of the sales ledger control account. So whatever is on the debit side here in the sales ledger control account is on the credit side of the purchase ledger control account, and whatever is on the credit side here in the sales ledger control account is on the debit side of the purchase ledger control account. And this cash or check is cash or bank. Now purchase ledger control account, again first is the balance brought down on both sides, and this control account generally has a debit balance. And then on the debit side we have cash or check paid to the creditor, discount received, purchase return, set off for contra entry, and balance carry down. Now here remember there are 1, 2, 3, 4, 5, 6 items, and on the credit side, let me just label this for you. This is debit side and this is credit side. So now on the credit side, there you have credit purchase, interest charged by debtor, refund from suppliers, balance carry down, and here there are 5 items. Now here everything is from. On the credit side, in the purchase ledger control account, everything is by or from, and on the debit side it is to. But if you see in sales ledger control account, it's just the opposite. Here on the credit side it is from, and on the debit side it is to. Then after that we find the total on both sides, and then we end it with the balance brought down. Now contra entry in a control account has a different meaning. So contra entry in a control account is when the organization or a firm is the buyer and the seller. Okay, so why the purchase ledger control account has a debit balance? So first, it could be because of an overpayment to the creditor, or the goods are returned to the creditor after paying the account, and paying in advance for goods to the creditor, as well as cash discount not being deducted before the payment made to the creditor. Now, why the sales ledger control account show credit balance? So first it's just the opposite of the purchase ledger control account points. So here the overpayment is made by the debtor. The debtor is returning the goods after paying the account. The debtor is paying in advance for goods, and the cash discount is not being deducted before the payment was made.